Welcome to the CFTC's World Investor Week event, Technology and Fraud, Stopping Scams in a Digital World. And for those who joined us at the start of our program, you just heard our colleagues present on exploring effective social media investment scam interventions and learning about WWTD, or what would Taylor Swift do. And if you don't understand that phrasing, I invite you to revisit that panel on our YouTube channel. We are excited to transition to this afternoon's panel, Is AI for Investors Road Ready? Again, welcome to everyone who's joined us. My name is Siobhan Kershaw. I am a senior innovation advisor, a champion of innovation, and a champion of lifelong learning, currently serving in the Office of Technology Innovation within the Commodity Futures Trading Commission, where I've spent or made my career for the past 15 years. In today's modern world, we're finding that firms across the financial marketplace are at a unique time in their evolution. Recognizing that businesses of varying scales are faced with some of the most complex and dynamic challenges in their history, including greater demands to their business model to present cutting-edge solutions, adopting new policies, and proactively driving to greater operational efficiencies. And in many cases, we're seeing evidence of AI-based solutions to resolve some of those challenges, whether it's algorithms that analyze scores of data in minutes, or fee compressions, or predictive tools, or data ubiquity among product offerings and apps. One thing is certain: AI is not the future, it's the present. And it's vital that we understand how it transforms industries, democratizing them or consolidating them, for better or for worse. And unfortunately for us, responsible AI does not arrive with a blue check or a verified sticker to differentiate from irresponsible AI. So it's critical for us to become more educated and savvy and have these important conversations. Helping us to make those determinations today are our esteemed panel guests and leaders from industry hubs to the industry itself. Starting with George Harada, Director of CFTC's Office of Technology Innovation. George leads the CFTC's Financial Technology Innovation Hub, which is tasked with driving change and enhancing knowledge through innovation, collaboration, and education. He is a former advisor to the Federal Reserve Board's Tech Lab, where George contributed to experiments regarding central bank digital currency, or CBDC, and previously served as the Senior Technology Advisor for Lab CFTC, focused on innovation, analytics, distributed ledger technology, and cryptocurrency. Also joining us today is Jaime Warkey, Vice President and Head of Financial Innovation at FINRA. Among the list of priorities and initiatives, Jaime's office focuses on analyzing financial technology innovations and emerging risks and trends related to the securities market. As a part of these responsibilities, Jaime works to foster an ongoing dialogue with market participants to build a better understanding of fintech innovations and their impact on the securities markets. And rounding out our panelists is Liz O'Sullivan, CEO of Vera, an AI reliability platform. Liz is an expert in fair algorithms, consumer privacy, and artificial intelligence. And with over a decade of experience, Liz has advised many, including those in the local, federal, and international bodies, on approaches to regulating AI, including the New York City Council, the US Congress, and the United Nations. And most recently, Liz was appointed to be an inaugural member of the US First National AI Advisory Committee, which is a federal body tasked with advising the White House and Congress on how to foster AI adoption and regulate its risks. Panelists, good afternoon and welcome. Liz, I want to level set and start with you, really To understand from a baseline for our global audience who have tuned in today, can you explain for those who don't completely understand how this technology works? Can you explain generative AI and large language models from a 30,000-foot level?
Absolutely. And in fact, this is a pretty easy question because when you ask, how does it work? The answer is, we don't know. And when I say we don't know, it's not for lack of trying. It's simply because the models are very large and incorporate a ton of data. And when you think about the amount of data, we're talking about scale analogous to the size of the entire internet, at least the English speaking internet for now. And essentially, what deep learning has brought to the field predictive modeling is a system that takes in a great deal of data, and it's essentially like thrown into a blender, and out of the blender comes a model that usually works. And at its core, it's a lot of math. It's a lot of extracting mathematical representations for the data that you feed into, whether that's an image or a set of texts or a novel or all of the novels. And at the other end, when it simply works, that math is so complicated that no human could even possibly understand the degrees to which it's figuring out what's known as edges. So cases where it's able to determine pixels or this set of words or characters or letters seems to be influential in generating a correct response. But at the core, it's humans who look at the data and identify this is a correct response, this is an incorrect response. And that's for supervised learning, but there are additional forms that are able to sort of figure that out on their own.
Yeah. If that's an easy question, I can't wait to see what the rest of our conversation holds. George, really, the title of this panel is AI for Investors Road Ready? And it'd be helpful if you could explain and draw a connection for us, really understanding AI in finance. And if you can use, a common example, something like self-driving cars, for example, to help drive home the point, that would be helpful.
Great. Thank you, Siobhan. And I should say before I do this, of course, we've done our disclaimer saying that any firm that we mention or anything we do is not an endorsement. And I have to sort of double down on that because I'm going to use the example of Tesla. And I have to say, a number of years ago at my wife's prompting, I bought $200 worth of Tesla stock, which I still own. It's done quite well. And again, I want to make sure I don't own a Tesla. I just happen to have, a small investment in Tesla, but I just wanted to be upfront and be clear about it. Okay, so when we were thinking about the panel, we were trying to come up with a good analogy. We were trying to think about what investors would be interested in hearing about. So hopefully those of you that are attending, this is the question you're trying to get to, right? Is this road ready? So there's a lot of excitement around ChatGPT, and there's obviously that brought up a real renewed interest in AI. And again, we thought of the number one question that investors have is whether AI is sufficiently mature enough to take over an individual retail investor's investment decisions, right? So people want to know, hey, can I just, put my money into some sort of AI ETF or I saw something on the internet, some YouTube video that says, give us our money, give us your money and we'll invest it using AI techniques. So sort of the general question we thought about. And we sort of think of this a little bit as to whether the analogy would be sort of a self-driving car. Would you be willing to trust your life or the lives of those around you into a self-driving car? And again, I want to be clear, I'm not offering an opinion on self-driving cars here, but I think the analogy is a good one. So let's start with the basic question. Are you willing to trust your life to a self-driving car? Many people implicitly do that every day. According to Tesla, I was trying to look for some stats and I found Tesla cars have been driven over 9 billion miles in autopilot mode since 2014. That's a pretty impressive number. So clearly many people trust Tesla. But then here's the other question. but would you be comfortable asleep at the wheel while your Tesla is driving 75 miles down, down the interstate? I'm assuming, Siobhan, hopefully the answer for you would be no, that you would not be comfortable sleeping at the wheel. What's going on? So I think that part of the answer here is staying vigilant, but that's the analogy we thought would be a good one for this panel. And I'm hoping that by the end of this panel, you got the people listening in will have a better understanding or come to their own conclusion on the question of, is AI for investors road ready? So back to you, Siobhan.
No problem. Fair enough. Jaime, as the head of financial innovation at FINRA, I'm certain discussions around advances in AI cross your desk on a weekly basis, if not a daily basis. We're probably keeping you from some of those matters right now by hosting this call, but particularly with the uptick in robo-advisors and this proliferation of chatbots that respond to consumers directly with very little human oversight, can you share with us what is some of the technology that's emerging or the trends that you're seeing or your team is seeing at FINRA?
Well, before I do that, Siobhan, I just want to say appreciate the opportunity to be here with you guys today, and appreciate the opportunity to having this conversation with you, Siobhan, and the other panelists. I would note, George, that while Teslas may not be road ready, there are some autonomous vehicles that are available in San Francisco that you can take a taxi ride for, that you can actually sleep while they're driving. So it depends. And I only draw that analogy to say it depends on the AI techniques that it's actually being used. Because there's a lot of different types of AI techniques that are involved, right? So there's some that are things like machine learning, some that are deep learning, and natural language processing. And depending on the techniques, there's different set of risks that are involved, and there's also a different potential set of benefits that are involved. So AI, you can think of AI almost like an umbrella term to encompass all these various techniques. And it's really important to look at what is the specific technique that's being used, and where is it being used along the process, right? So especially when you're considering things like financial investing, you could have back office processes that are using various AI techniques that potentially carry very little risk to the underlying investor. And you may not need to know exactly kind of how, as Liz was describing, kind of how they got from point A to point B in those situations. But if you have something that's forward-facing towards what George was describing, then those concerns become more acute. I would note that as we've been looking at issues around generative AI, we have seen a number of different offerings, some by unregistered entities that purport to provide information, in some cases even potentially guidance to investors, directly to investors, to help them as they're making their investment decisions. I would caution investors that as they're thinking about these types of tools, it's frequently not directly obvious what are the limitations associated with these tools. So for example, for generative AI, there are things called hallucinations, which is basically when the model extrapolates information in order to create something that's not true, but presents it very much as being true, because the model is really not designed in order to find specific facts. Frequently, the model is designed to find a creative answer, or to find an answer that makes interesting sense based off the data set that has been provided. So those hallucinations are very much possible in the context of the responses that generative AI may provide. There's also limitations based off the data set that's actually being used. So for example, you could have a data set that's over-inclusive or under-inclusive, and depending on that, they may not generate the type of response that you want. So working with these tools directly by investors does present certain types of risk. There's also for firms who are thinking about doing these, offering these type of features, to understand that there are, even though you may think of yourself just as a technology firm, there are various requirements under the law associated with registration requirements when you're providing investment advice to investors. And it's important, even if you might think of yourself as a technology firm, to understand that those may apply to you depending on what you're doing as well.
Yeah. And George, I'd love to hear from your perspective as well. We're seeing these strides, just as Jaime mentioned, and we're seeing evidence of these AI algorithms that can analyze market data. They're developing forecasting protocols. They're making split-second trading decisions. But the flip side to that coin is determining whether AI can exploit the market and really capitalize on consumers. Can you touch on that a bit?
Sure, absolutely. And I might summarize your question to, can AI manipulate the market? And I would say, based on the research that I've, looked at out there, that the short answer is yes. There's just different ways that it can happen. One of them I was looking at as far as like optimizing profits. There was a recent study entitled "Can AI Perform Market Manipulation at Its Own Discretion" by, and I'm going to butcher his name, Takanobu Musuta. He basically found that when they were doing these model simulations, that without the researchers telling it to cheat and to manipulate, it sort of found its way toward doing that as a way to optimize their profit. Another example of how AI can manipulate the markets, you may remember back in May, where there was an AI generated photo that made the news. It sort of started off on Facebook and then spread its way around. It was sort of black smoke coming from a building near the Pentagon. And for a brief period of time, there's a momentary crash in the market. Then once people realized that it was fake, then it came back. But that's an example of how, I think it's an example, one of the first times that an AI generated image had caused some market manipulation for the market itself to change. And there's been some research done recently on collusion, and some have shown that separate AI systems working independently will somehow come up with tacit collusion on their own, which is sort of a crazy idea, right? Without even talking to each other, they're sort of saying, hey, we are optimizing, and they sort of fall in line. Again, these are sort of tests. But one of the other things, I was looking at a Columbia Law School blog recently, and the authors found that, and this is something that we would sort of think about at CFTC, is that when they had these AI tools working on indexes, investing in indexes and investing in the underlying, they found that over time, the AI started to see that they could maximize their profits by manipulating the underlying to benefit on the index. And again, this is something at CFTC that we concern ourselves with, that somebody might manipulate the underlying commodity to impact and make more of a profit, say, in the futures contract, or manipulate the futures contract to make more money in the options contract. So again, this is much simpler than the stuff we oversee at the CFTC, but one we could imagine if you were going to allow an AI bot access to futures, options, commodities, that sort of thing, it might find itself doing it. But one sort of weird question for the lawyers in the room, some would say that manipulation requires intent. Is there intent when an AI system just finds its way through reinforced learning toward a profitable thing? I won't answer that because I'm not a lawyer. So there's some thoughts there. Back to you, Siobhan.
Yeah. And Liz, you've actually worked intimately in this space. I'm sure our audiences are curious about your background as the co-founder and VP of Surveillance Technology Oversight Project, and the time you spent as VP of the Responsible AI and AI Explainability Model Monitoring Company. What was the driver for these projects and organizations, and really what rationalized these initiatives?
Yeah, it's a great question. And thank you for inviting me to this panel. I beat me to the punch. I should have said that earlier on. Yeah, and it's quite simple. In fact, I had been working in the industry of AI, whether I wanted to or not. As my first job out of college. I wanted to work at the intersection of the future and technology. I just thought it was fun, and got my start back in the days AI didn't work very well. So we weren't thinking about explainability or bias or privacy or security. We should have been, but at the time we were just focused on trying to make stop doing weird things that we couldn't sell to our customers. And it wasn't until 2017, of course, a few very critical AI advancements had happened in that period of time. that really opened my eyes to the power that the technology was able to achieve and to make decisions and to make good decisions in fractions of a millisecond. I knew that this technology was going to change the world. And as my role at that company, right before I started those two, or I came to join those two organizations, was to create data sets and to label them and to use those to pour into a deep learning algorithm, just as a blender, and produce models. And at the time, I saw the crazy and wild and wacky ways that these models could cause damage and could screw up and hurt people. And there were many ways, whether it was bias in medical decisioning, diagnosis algorithms, or false positives in algorithms that were trying to detect crime or fraud. The long list of ways that it was causing harm really alarmed me. And I knew that if we didn't take active steps to face these problems head on, we were never going to get to the Star Trek future that I think we'd all like to live in. And so I knew that it was more than just a technology problem, although the lack of viable technology to produce explanations was certainly part of it. So I decided to attack this issue from a couple of different perspectives. Those perspectives was to join an early stage organization that was popularizing and building awareness around the tools that do exist to produce some close guesses at explainability. It's not perfect, but it is certainly better than nothing, especially in highly regulated environments. And that was Arthur, the model monitoring company, which was actually created by a CEO who ran AI at a big bank. And he knew, and I learned a lot from him about the types of models that banks run and the ways that they can go run afoul of the corporate wishes. And sometimes it isn't even AI, it's just a regular old predictive model that can cause trouble. The other thing that we need was to educate regulators and to bring them up to speed. And so they would become aware of the kinds of practices that are standard in Silicon Valley. And those practices involve things like scraping any database, any website to collect data. And before you know it, your face might end up in a publicly available data set that's being used for all kinds of applications, some of which you may not approve of, involving, defense or policing. And so we set to work, and I joined that organization. I was the first technology director at STOP, and we worked on improving laws. And as a result of that, I was able to testify and provide comments and work with New York City regulators around the time they passed the what we call Local Law 144, the first of its kind to require audits of human resources algorithms to assess them for bias. That's just one of the many initiatives that we've taken on, we have taken on as the City of New York, and many more have been under discussion and are well underway. But we know this, regulation lags behind technology, and that's never been clearer than it is right now.
And sadly, that presents our reality. Jaime, switching gears here, I have a double hitter for you. I know you're up to the task.
Oh, no.
One of the things that regulators struggle to put into words is the concept of both embracing the advancements of today and balancing that with endorsing responsible innovation. And I say responsible innovation because we're all aware of the implications of bad actors that Liz was just sharing with us, have the propensity to kind of infiltrate the marketplace. So how do you reconcile that balance? Can you share with us some insights into how your office or innovation offices alike can analyze and address the new risks that Liz was presenting and some of the trends in the securities markets?
I think the first step is really understanding the technology and understanding what its potential impact can be on the marketplace, right? So, and when you think about those things, it's really making sure you have an ongoing dialogue with the industry, as well as academics, potentially investors and other market participants that are out there, in order to understand kind of how our business model is changing, how our business process is changing as a result of this technology. And once you have a baseline understanding of that, then asking some of the harder questions like, well, what are the new types of risks that may be getting introduced? Because you can't just look at it from the old paradigm of, under the old system, I was thinking about these types of risks. So are those risks here in this situation? Because the risks are often, some of those risks may go away, but there's new ones that may get introduced. So you have to think critically about kind of how are these new ways of doing things impacting the ultimate risks that exist. And then once you're able to do that, it's again kind of thinking about, what are the potential trade-offs associated with that? Are there ways to mitigate those risks? And by trade-offs, I mean, what are the benefits that maybe counterbalance that? Are there ways to mitigate those risks as well? And then, you always have to go back to the rules that apply, right? So, and the requirements are to apply to be governed by the rules that currently exist, but there is a space for dialogue with the regulators about kind of, can you still meet the spirit of the rules based on what you're doing. But it's important to have that dialogue and not just kind of rush face first in terms of what you're doing.
Yeah, no, that's a fair point. And we want to make sure, George, from a perspective in the commodities market, that we're looking at what some of those emerging risks are as well. What are some of the associated risks that you've examined? I know you've explored this concept of AI voice cloning. We know human biases can play a factor. All of these things are becoming more and more prevalent. Can you share with us what you've researched?
Sure. So recently, two kind of unique hacks have come up that are worth sharing with the audience, and they're around the concept of voice cloning. But I think the place that most people are familiar with it is these sort of horrendous situations where somebody will get a call from somebody saying, "I'm your grandchild and I'm in trouble and please send some money." And with voice cloning, it's amazing now with the way AI is that with just a few seconds, a couple minutes worth of somebody's voice, you can make a pretty convincing voice of say the grandchild calling up and saying, "Hey, I need help." I'm always amazed by there's different podcasts that I listen to, and there's one particular podcaster, I won't mention the name because I don't want to endorse one over another, but sometimes he'll say, look, I'm just tired this weekend, my voice isn't feeling well, so I'm going to have the AI version of myself do the podcast, and it'll be a 30-minute podcast, and it is indiscernible from the guy. Like, I'm just so amazed. The only time you can tell is there's certain proper nouns that are just slightly off, and the pronunciation of how you would say, say Siobhan Kershaw, maybe they sort of trying to figure out a way to mispronounce it. But anyways, you get the point that it's only then that it's caught. So two of the recent hacks that I thought were quite interesting. One is MGM and another one is Fortress Trust. But on the MGM one, part of what they did is they had somebody do a voice clone of one of the IT workers. And so they made a phone call, pretending to be this this particular IT specialist. It was somebody known to them. That was part of the social engineering that ended up in the end with MGM having to pay a $15 million ransom once they got the ransomware installed, because they were able to use that voice cloning technique to convince them that it was just one of their colleagues. The other one, which happens more in this sort of the crypto space, was there's a company called Fortress Trust, and one of their third-party vendors fell victim to it. It was a great in the sense of clever attack where all the people working at the third-party vendor got a message saying, "Oh, we're having problems with your paychecks and it's affecting your health benefits. So click on this link here, to see if you're affected or whatever." And most people didn't click on the link, but one guy did. It required him to log in using two-factor authentication. So he had an authenticator. He put in a code, and so then he gets a call, and the call is voice clone, right? A voice clone of somebody he knew in the IT department, somebody he trusted. And the guy's like, "Okay, hey, we need you to log into this other thing and, tell us what code you're getting there. Oh, here's the code." Well, of course, on this other side, he was in there poised to log into that system. All he needed was that multi-factor authentication code. Once he had that, he added his cell phone to the guy's account. He was now in, and the end result of that particular attack was, again, it was about $15 million that was drained from that one crypto company. So these these voice cloning, this is just one example, right? But voice cloning is a sort of a powerful tool, and it's kind of a scary tool. And you have to be careful. If I call you up, Siobhan and I work together. If I call up Siobhan and say, Siobhan, I really need you to do X, you may say, is it really you, George? So what's our code word going to be? How are you going to know if it's really me?
Exactly. I'll have a Rubik's Cube for you to complete before I proceed. Liz, I want to jump back in your corner. At present, you're serving as an inaugural member of the National AI Advisory Committee, providing guidance to our nation's AI strategy through the White House. How do you envision shaping the AI strategy forward for the US? And how do we strike that balance between innovation and ethical considerations at a national level?
This is a great question, and it's one that I get all the time. And if you don't mind, Siobhan, I'd like to just push back ever so slightly on this notion that there is a dichotomy between responsible development and innovation. I don't believe that to be true. I have personally lived through startups of all shapes and sizes who have accomplished incredible things while still adhering to, for instance, GDPR regulations. And as an activist and an advocate of things that I believe most people would object to if they knew what was going on behind the scenes, I think that we in the US severely lack things like a strong privacy law at the federal level. And all Americans suffer because of that. And there are so many examples that I can point to. As a CEO, we know that in a very fast and rapidly evolving market, we have to be able to move as quickly as possible. But our commitment to ensuring that our technology has guardrails and that operates not just ethically, but productively, the way that you want it to, the way that you expect it to, is a competitive advantage. And I'm really excited by this new wave of generative AI, especially because it gives us abilities to automate certain practices that are extremely human driven and manual right now. These are the kinds of things that do tend to slow people down, but we're kind of missing the point when we say that every bit of compliance has to be human driven, every bit of compliance has to be manual. It doesn't. And in fact, it protects companies from suffering really grave consequences that can ruin your brand, that can ruin your customer trust. And in doing that, is it actually worthwhile to move so fast that you are breaking things? So I think that a lot of people fear that we're going to harm the economy or that we're going to harm startups with common sense regulation that is actually quite useful and that most people want. It is a shame to see that this dichotomy or this, adverse opposition between the two sides is often presented by corporate lobbyists who spend a lot of money to convince regulators that that's the case. It hasn't been my experience, and I do understand that there is a diversity of opinions here, but it is very interesting to see its impact and this degree of the influence of money in even the council that I sit on. But that's just the normal amount of any government body is subject to the same.
No, I think that's an excellent point, and I would agree. I believe in the marriage between innovation and compliance, and I think there are far more members who operate within the guardrails than bad actors who don't. Liz, we actually had a question from the chat that I also want to pounce your way. The question asks, how should an investor ethically leverage AI during investing decision-making, and how much reliance should be placed on it given the current state of AI readiness?
This is a very, very interesting question because it's taking something incredibly multifaceted and trying to distill it down into a single answer, and there just isn't one. I hate to be so vague and resistant, but let me try to get a little bit more specific. So one thing that I can say is if you're turning to a commercially available tool like ChatGPT for investing advice, this is probably a bad idea. And it's for all of the same reasons that Jaime and George have mentioned already. Large language models hallucinate. This is not a bug. It is actually how they work. They're trying to predict the next sequence in an existing sequence. And in order to ground it in fact, you need additional sources. Somebody needs to decide what truth is and then program the bot to understand and only respond with these things that humans have decided are worthy of a response. The other thing to understand is, I think it really deeply depends on what kind of AI you're using. If we're talking about a very technologically savvy investor who understands the limitations of what AI is good at, what it's bad at, what it might be good at one day, and what it never can do, then you might be better positioned to take advantage of tools. Perhaps you're building them yourself, perhaps you're using something off the shelf, but there are certain patterns, and I think most people, and I include myself in this, when I first got started in AI, it looked and felt like magic. That's because it is very advanced, and it is astonishing how quick and how accurate it can be sometimes. But that sometimes doesn't always generalize. And there are cases, especially when we're trying to essentially predict the future, that it's simply not suited for. So for instance, COVID. AI could have never predicted COVID. Why? Because it's taking the data that it's seen and everything that it's experienced in the past and assuming that the future will continue to look exactly like that. I call it a conservative technology in that it's trying to preserve the qualities of the past into the future. And so you see this experience when you're talking to something like a ChatGPT and you ask it a question about 2023. It doesn't know the answer because it's never seen data about 2023. So chatbots are one thing, tools that are built fit for purpose in financial trading and investing are a completely different thing. But one thing that I would suggest to anybody who is interested in using AI is to be aware of what it is that you're using. If they don't disclose things like their training data, how the algorithm was made, how they collected this data, whether it was tested for bias, whether it's being monitored, then it might not be something that's worth your time.
I will say I love that particular term, conservative tech. In smart contracts, we use a term called oracles to kind of help us determine truths and baselines. And I would agree, you really have to leverage as much information as you can to make decisions. Jaime, at the beginning of this panel, we asked, is AI for investors road ready? I'd love to hear your take, especially with your experience on both the technology and the legal domains.
So I'll come back to your statement when we began this panel, Siobhan, which is that AI isn't something that's happening in the future. It's already here. And so I think that there's already a number of different ways it's being used in the financial industry and specifically within the securities industry. The question to me is really, as it progresses in use, and especially as new techniques become more prevalent, like generative AI, how are we likely to respond to those, and what safeguards do we have around it? A few years back, we actually published a report on AI and how it's being used in the securities industry, specifically looking at where the securities market is using it, and then talking about what are some of the regulatory requirements around it and what are the risks, some of the risks around it, as well as the benefits. One of the things we touched on that AI is kind of different than other types of technologies is around the issues of explainability and bias, specifically around data bias. So unlike other types of technologies, for example, algorithms that work, they kind of use an if-then statement kind of process where if this happens, this other thing happens. It's almost like a decision tree. Whereas AI, that's not necessarily the case. And you frequently are not able to find out exactly how it got from one specific question to one specific answer. But you need to have an understanding of what are the factors that went into it if you're going to use it to make important decisions. And you also need to have a governance process around it so that, that you have, for example, potentially have guardrails around kind of, what it can do and what it can't do based on what you know. Or you have the ability to do ongoing back tests, where you're not just relying on data that existed in the past, but are actually thinking about how changes in the environment can function. So I think as you think about all these issues, it's important to understand kind of, you have to think about it from a slightly different paradigm in terms of explainability. And the others around data bias, and again, I think Liz kind of alluded to some of these issues before, you could have an AI system that's trained based off of data that make in itself contain bias. For example, thinking about things like redlining, and if you're using that decisions in order to make other decisions about what are safe things that you should be doing as a firm, as an individual, you may be actually exacerbating those biases because the machine learned on data that contain biases already within it.
No, those are excellent points. And George, I would ask the same question. Is AI for investors road ready?
Well, I'm going to reframe it slightly and just say, are you ready to let AI take over your investment portfolio? In fact, maybe after this, Siobhan, I'll have to ask you on the side whether, as at the end of this panel, are you convinced that you're ready to let AI take over?
Well,
But
I'm certainly not falling asleep at the wheel. So that,
there you go.
that's my first
That's
statement.
fantastic.
Just head to San Francisco, Siobhan. You'll be fine.
Well, I'm imagining too. Well, I'm going to give another sort of. I love analogies, so I'll give you another analogy. Back to our Tesla autopilot, right? So, two scenarios. Scenario one, the Tesla autopilot meant to keep up in safe and flowing traffic, or Tesla autopilot set to try to beat the traffic or take advantage of every break in traffic to surge ahead. Now, we've all been driving, well, those of us that live in the DC area, we have been driven down 95 and seen somebody zip in and out through all the lanes and, take advantage of every second. I don't know if I want to see Tesla program their self-driving cars to take advantage of every moment on the road, particularly because if there are more than one Tesla self-driving car doing that, I hate to think of what the scenario is. So the question is here, when we think about investments, would you be comfortable, are you comfortable with scenario one versus scenario two? I think, Siobhan, you'd probably be more comfortable with a Tesla that was trying to keep you up with traffic versus a Tesla that was trying to take advantage of every little break. I shudder to think what the world would be like if we had it configured that way. So all that is to say, I've been looking at some sort of research here, trying to say, is it road ready? Are we there yet? A recent Bloomberg article talked about how there's no clear-cut way to sort of determine this. As Liz pointed out, you can use AI in different ways. So that's what the Bloomberg article was getting at. There's going to be different perspectives. There was one, I don't want to name any specific products here, but there was a special index of sort of AI hedge funds, and they found that overall, over the last 5 years, these underperformed by about 9 percentage points. Another one was an AI powered, ETF. It lagged the S&P 500 index by about 50 percentage points over a period. But there's a recent academic paper that came out that found that AI is now starting to get to the point where it is sometimes able to beat the human managed peers. But interestingly, not necessarily the indexes. It's a completely different topic, but for those of you that want to read about something interesting, you'll have to look at the Warren Buffett's $1 million bet on hedge funds versus index funds. So put a point there. If anybody wants to research that, that's a very cool and interesting thing about index funds. So what we've seen is that at least at this point, it appears that these funds, these indexes, these AI powered bots are not necessarily, some of them are able to beat the humans, not necessarily consistently, but they're not, from what I can see, really beating the indexes. So AI is good at certain things. They're good at reading annual reports and sentiment analysis. Back to what Liz was saying, AI is good at, you give it some material and say, make sense of this. That's one thing, right? That's generating some content, but it's not necessarily great at predicting the future. And that's what we as investors would like to do. In fact, you won't see me if I figure out a way to predict the future. I won't be here for the next World Investor Week if that's the case. So anyways, so I think that the other last thing to mention is that large data models are based specifically on data sets. Liz mentioned that, if you asked about something that happened in 2023, like ChatGPT, when it was first generated, had a data set that ended in mid-2022. So anything after that, it was sort of lost. If you ask the original version of GPT, and I did to recommend a crypto exchange, it might recommend FTX. Well, those of us that have been around know that something happened in November of 2022 that might make FTX not necessarily a good choice, but ChatGPT was not aware of that because its data sets started there. So is it road ready? My opinion is not quite yet, but don't fall asleep at the wheel. If you want to do it, you might invest, but that may be cautiously with money that you are comfortable losing as you want to test out this new technology. So, but I'll leave it at that. Maybe some other people have some thoughts that they want to add to that, but those are just some random thoughts on that question.
Yeah, and it's helpful for us to kind of look at, George, also. I think Liz made an excellent point earlier that we're seeing more of a conversation between regulators and innovators. And so as a question for Jaime and Liz, I'm curious about the work from your offices. Jaime, if you could share a little bit more about the innovation outreach that your team is doing. And then Liz, I'd love for you to chime in and tell us a little bit about what Vera is doing and the unique approaches or methodologies that Vera is using to really ensure accountability in AI systems.
Thanks, Siobhan. So we engage in kind of discussions with the industry participants in a number of different ways. So one of which is we have a fintech industry committee that's set up that's designed to bring in various member firms, so broker dealers that operate within the securities industry, as well as academics, kind of investor protection type of advocates that work for nonprofits, in order to discuss with them kind of, what are the things that they're seeing, where are they seeing concerns, where are they seeing potential benefits for individual investors that we should be focusing more on. So that type of ongoing dialogue to make sure we kind of have our ear down to the ground so we know what's going on is really useful. And then we also engage in various one-on-one discussions with vendors or technology vendors are operating the space who may be looking to kind of get into the financial industry. They may already be operating in another industry, or they may be working with a number of our member firms. We speak to a number of academics who are kind of the forefront of the research around some of these technologies as well. And then we also host as well as participate in a number of conferences and roundtables that where these types of issues are discussed. I always describe this as more of an art than a science, right? There's no one way that you kind of source the information, but it's making sure that you're making a proactive effort in order to find out what's going on, and then thinking about what the impact of that information really is.
Yeah, and Liz, if you'll tell us a bit about Vera, some of those methodologies that really are used to help employ and ensure accountability with AI systems, what constraints, what measures are being used. We'd love to hear a little bit more about that.
Absolutely. And Vera is, exactly as I mentioned before, an attempt to reduce that friction between innovation and compliance. And we believe that, emergency brakes will help the cars go faster. And so our technology is made up of AI in part. There is a lot of things like language models, not necessarily large ones, but the things that language models are good at are things like detecting sentiment, which can be used for assessing content or intent. Whether somebody is trying to game an AI, a generative AI technology, to commit a crime, to get it to persuade somebody to harm themselves, or to help it, understand parts of the world that may be classified, right? That may actually be dangerous to all of us, like chemical weapons, biological weapons, et cetera. That's not to say that the average consumer can convince a chatbot to do that, but that period of time is maybe not as far away as everybody thinks it might be. And so our guardrails use a blend of deterministic and probabilistic tools to do things like block attempts to request certain activities, block PII or passwords or other security vulnerabilities from being shared with chatbots, and to identify where's the best source? Where's the best place to answer a certain question? Models are very good at some things and very bad at other things. And so it can be really hard for anybody to know exactly what degree of trust they should place in that chatbot. And we also see a great deal of opportunity in using AI to translate, for instance, code to English, so that compliance managers can ask questions of a particular model, like what tests were performed, or what sorts of measurements have you looked at, and also what sorts of data is being used. All of this is the goal, to create good documentation that can help inform consumers about how models are made, what degree of trust they should place in them, and that will help us all have a better ability of a critical eye towards what these models can do and what they can't do. So we're really excited about bringing AI into the future. We just think that using it in responsible ways, using our own guardrails, in fact, to prevent these really bad things from happening, will allow the rest of AI to flourish.
Yeah. And George, I got a note from the chat. Any thoughts about the convergence of AI in government and regulation?
Okay, so the convergence of AI in government and
I'm
regulation.
assuming that, I'm assuming the question is really toggling from a perspective of will regulators adopt AI in our process?
Right, and that's an interesting question, because part of the Office of Technology Innovation is sort of thinking about how these emerging technologies can be used internally. I do know that regulators, including the CFTC, are adopting artificial intelligence in different ways to, again, I don't want to steal the chairman's thunder, so I want to try to be limited as to what I say, but I can tell you that AI holds a lot of promise as to what can be done at agencies like CFTC, particularly with the advent of cloud computing, where we're starting to see so much of our data up there in the cloud, and then the availability of elastic computing. I know that FINRA has made huge inroads in moving everything to the cloud. We have moved most of our data to the cloud, and as a result, then we're now at a point where we can then sort of take advantage of the elastic computing that you sort of need when it comes to AI. Some of the interesting sets that I've seen recently, like I was looking at something the other day from the IRS, and the IRS was looking at who, using AI to determine who to audit. And I've seen that before with other agencies. Again, I hate to steal any agency's thunder, but I do know that other agencies use AI if they have a large group of firms that they have to oversee, determining who the appropriate audit target can be. And using AI, if you have a limited set of auditors, AI can be a powerful tool to determine who you should or should not audit, to try to find the wrongdoing with a limited set. There is, of course, some issues with bias. I've seen that at the IRS before, where there's been some accusation of bias against lower wage earners, because perhaps the algorithms say, well, these we can, if somebody's using the earned income tax credit, let's say, you might be able to more quickly determine whether or not somebody's in violation. But is that necessarily, from a policy perspective, the people that you want to be going after when there are other higher value targets out there? Again, the AI that I was reading about with the IRS, I believe that they were talking about, targeting, looking at people with incomes of, say, over $10 million, and which one should they audit? And so yes, do I think that, are we doing things with AI? Yes. Do we see the regulators are doing, using AI as a force multiplier? Absolutely. And we'd be silly not to take advantage of that.
Yeah, I agree. I think that the technology speaks for itself, and really our adoption of such is already evident in our operational efficiencies, right? And so we know that both the Government Accountability Office, as well as executive orders that have been released from the White House, are all in championship that we adapt as regulators the technology that allows us to be more efficient and more modern. So I appreciate your answer to that. And it's good to know from an investor perspective perspective and a consumer perspective that both the regulators and innovators are really driving to the same goal. And in this particular instance, that goal is really a safe marketplace for trading and operating. We are quickly approaching time. I'd love to, before we conclude, have a lightning round question for each of you, no more than 2 minutes each. If you could create your own chatbot or AI automation, what would you call it? What would your solution provide? I'll give you a minute by starting with myself so that you can be thinking about this. Personally, I would like to develop a tool that the investor is able to enable from their phone, listen to their conversation with their financial advisor, and help them ask the questions that they need to raise. If they still wanted to invest with an actual person at a traditional finance institution, this app would allow investors to listen into that conversation, to ask the questions that need to be raised, and flag any portions of that conversation that might present risks. I'd probably name it AI for AR, referencing AI as artificial intelligence, and AR for auditory range. So Liz, I'll kick off to you. What would be your lightning round response?
Super easy for me because we already did this. We are in fact building a chatbot and her name is Vera. And the reason we chose Vera is because it's kind of like Verify, and we wanted her to have sort of a soft and friendly appearance. And ultimately, Vera's goal is to help people understand what they should interpret when they see responses from AI, and to make AI safer for everybody so that we can all live in the future.
That's great. I shouldn't have started with you. You clearly have something already in the works, so that made it super easy. Jaime, going to you.
Well, Vera's taken, so I guess Alexa's taken, Siri's taken. So if I had a chatbot, I guess my kids are really into the Percy Jackson book series, so
Yeah.
I'll go along with the mythology theme and pick Athena for the goddess of wisdom. And the problem I'd have it solve. When we were having some of our discussions last week about this panel, we were talking about the potential for a government shutdown. And I would have my AI chatbots be able to solve the riddle for how to prevent future shutdowns so that we would never have to be threatened to not have our investor forums.
Yeah, Jaime, I could hear the cheers from the audience coming in support of that. So that's fantastic. George?
Well, this is such a tough one, and I'm going to be. I'm just going to come up with a selfish one. I apologize. I should be more high-minded, like Athena or Vera. But if I could wave a magic wand and create a chatbot, I would. It would be the golden goose one, and the golden goose would work this way. You could only ask one question a day, and it would be, "What stock should I invest in today?" and there'd be only one copy, and I'd have it, and then before you know it, the SEC and FINRA would be knocking on my door going, "How is it you're so good at this options trading? Because I know that FINRA gets and the SEC gets really anxious if somebody gets lucky in options more than once or twice. So I'd be setting off, and I'd have to show Jaime my secret machine, and then I don't know. They probably still, but yes, that would be my dream machine. Would be my golden goose that I could just ask one question a day. What stock should I invest in today? And sorry, selfish, not as high-minded as my fellow panelists who are much nicer and better people than I am. So.
Well, George, that's one way to get a headline on American Greed. And you open up your own app, we'd see you headlining everywhere. So I guess thank you for that response. Listen, this conversation has been really insightful. I am grateful to our panelists, Liz O'Sullivan, Jaime Warkey, George Harada. Thank you for your time and your effort with this panel. channel and sharing your apps, your AI apps that are maybe in the works. We know Vera is already in the works. I know our audience has found tremendous value in today's conversation. And to our audience members, it's important for me to note that this event was recorded and will be available on the CFTC YouTube channel in the coming days. We certainly invite you to revisit this presentation and share it with your networks. On behalf of the Office of Customer Education and Outreach, as well as the Office of Technology Innovation at the CFTC, thank you for joining us. We hope that you enjoy World Investor Week and have an inspired afternoon. Thanks, everyone.